Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today's Hump Day. It's a Wednesday, August 30th. Hey, we do got some economic news release scheduled for today. Of course, the biggie will be on Friday when the Bureau of Labor Statistics release their job numbers. But today we got the ADP employment for the month of August. So here's how it is. It's actually a pretty hot number here. We got back in July. Initially, it was actually at 178,000. It got revised up to 201,000, so a higher number there. And then forecast actually for this month, a lot of people months, and it came in at a whopping 237,000. So pretty big number there. On top of that, we got the second reading of the GDP, or Gross Domestic Product, for August. So the final reading will come out next month, but the initial reading came in at 2.6%. And the forecast for this reading was supposed to be 2.8, and it exceeded that at 3%. Now, part of this is what we're seeing is that consumer spending went up. It went from like 2.8 to 3.3%. That makes up about 2/3 of GDP is consumer spending. And then also we're seeing business spending as well going up. So we're seeing some very good news there. Now, the stock market, as you'll see here, we'll touch over here, is a little mixed. They all were up. The S&P and Dow, S&P is still up, but it's kind of like treading water right now. It's just barely above it. Nasdaq's doing pretty good, but Dow was up and then it went recently negative again. So that's why I say mixed. But what that touches on is that with the economy heating up, it looks like those are great job numbers. Will that give more ammo to the Fed to raise rates again this year? So that's kind of what they're looking at, is kind of creating some debate as to, okay, economy is doing pretty well, but is that going to be enough to go ahead and raise interest rates again this year? The other thing that could be holding the Fed back, of course, is the very low inflation number. We simply were way off the 2% when we're down to about I think it's 1.4, 1.5% year-over-year inflation. So that's really low. If anything, we were up to like 1.8 and it dropped backwards. So short term, it doesn't look, if you raise rates, the inflation's only going to go down even further, because that's the reason why the Fed typically raise rates, is to keep inflation in control. And right now, it's actually very underwhelming. So to kind of move on here, the other thing that's affecting the the stock market is Trump's tweet. He kind of tweeted out that talking on the topic, of course, North Korea, saying that the U.S. has been talking to North Korea and paying them extortion money for the last 25 years, and basically stated that talking is not the answer. So, of course, that's kind of spooking the markets a little bit here as a result of that. So let's see how the bond market's being treated here today. As you saw yesterday, we had huge ranges here yesterday and kind of settled in here. We did close above. Here's a floor of resistance here. So this is creating a floor. So we did stay above that. We started off lower. We're currently down about 8 basis points from where we left off. So from here to about here, we're down about 8 basis points. And as you see, we did test the first level of resistance, which is a floor of support. I'm sorry, first level of support, which is basically a floor. So this will help keep us above there, but it's possible it could go the opposite direction. It's not quite enough to worsen interest rates, but again, we want to see if it maintains that that floor of support. See if we can stay above that for the long term. Now, these new indexes, or these new system that we moved over to, this new system allows us to even bring up the 10-year treasury. So I think what I'm going to probably do is next week we'll start using the 10-year treasury. So I'll use the bond market and then I'll add another 10-year treasury, because that does play a factor into rates, because they compete for dollars on there. So, and you'll kind of get a better idea as to like today there was yesterday there was what they call the hammer. The 10-year Treasury came up with kind of the hammer formation, which basically translates to a reversal in trend, and it kind of is starting to look that way so far today. But again, we'll have to kind of wait and see. It does have its levels of resistance, kind of pressuring that one, that trend as well. So we'll come to, again, that would be kind of good to show next week. We'll just kind of start fresh on Tuesday. Next week I'll kind of bring that out to include that in here, so that way you get a better perspective of where money's going and any trends and such. So. All right. So anyways, that pretty much concludes it today. But if you guys want to get more updates, just come over to Twitter. You can find me at Mike Bjork and get your updates throughout the day here. And if you guys are in the market for a mortgage, just feel free to reach out. Email is the best way. We do purchases as well as refinances. We can assist in both avenues. All right. Have a wonderful day. Thanks so much for watching. We'll look forward to see you guys tomorrow. Take care. Bye-bye.